Wow, what a roller coaster. Welcome to the repeat telecast of September 2022. Mortgage rates were lower in January. People thought that Fed was done increasing the rates. I mean, they would increase but in way smaller installments. And true to that, the Fed only increased the last time by a quarter basis points, which is way smaller than the rate hikes done in the previous few months. Inflation numbers also seemed to go in the right trajectory. And then came February. The numbers showed a strong job market, which does not help the mortgage rates. The inflation numbers did come down, but these came down lower than expected. This did not help the mortgage rates, which puts us in a volatile mode. The market assumes a worst case scenario, and that affects the mortgage rates. The next Fed meeting is March 21st and 22nd. Yes, we'll all be keeping a close watch on what the Fed makes of all these numbers and what will they do with the Fed rates. And once again, I'll mention here, Fed rates is not equal to mortgage rates, but there is an indirect relationship which I will post a link below in the description in case someone wants more information on how these are connected. So, hey, ladies and gentlemen, I would like to welcome Sweet Lou. He is a mortgage lender with Primetime Mortgage. Hey, Lou, how are you?
I'm wonderful, thanks. How are you today?
Wonderful. Thank you so much, and thank you so much for accepting my invite on such a short notice.
Of course.
So tell us what do you do and what are your specialities?
I'm Sweet Lou Shorenstein of Primetime Mortgage. I'm one of the principals, and we will be in business 19 years, April of 2023. We're
Wow,
direct
congratulations.
lenders. Direct lender, for people that don't know the distinction between broker and lender, is we close as Primetime Mortgage, and then we transfer the servicing of the loan after the fact to Fannie Mae, Freddie Mac, or Ginnie Mae. And it gives us a lot of latitude, especially in the climate that we're in, where we have a very volatile interest rates. And we cater specifically to first-time homebuyers, first responders, nurses, teachers. We work for everyone, but that's the core of our business.
Wonderful. Thank you so much.
Thank
So I
you.
was just talking about where the mortgage rates are today. They are close to 7%, and how volatile the rates are in the past few weeks. So from a lender's perspective, we just wanted to get an idea of what the lending community kind of thinks of where the rates are headed, or what are we looking at in for 2023.
So I believe that we're going to be kind of on a roller coaster between 6 and 7 for an indeterminate period of time in 2023. The end of 2022, we were in the sevens, and then the rates back down. We got into the middle fives, and some unfavorable economic data came out in the last 2 weeks, and interest rates started climbing again. So right now, if you don't want to pay points, which is a fancy name for a fee to buy down an interest rate, you're
Right.
hovering right around 7%. For approximately 1 point or 1% of the loan amount, you can get to 6.5. Based on the last 6 recessions, the prediction is that interest rates are going to come down, and I feel very strongly about that. And then beyond that, the next thing that I would put out there is, on a daily basis, I'm asked, is this a good time to buy a home?
Right.
And I think this is an amazing time to buy a home, and I'm extremely confident in the feeling that people who wait to purchase a home are going to wind up paying more, because when the interest rates come down, if we, see the fours as a for instance, which there is reason to believe we will, you're going to have a surge in prices going back up again. We don't
That's
have any inventory. I'll put it out there for you that, having survived the housing crisis, we do not have any of the dynamics that were present that created that. As a community, we don't make liar loans, number one. Number two, in terms of adjustable rate mortgages, they're kind of few and far between and really limited to the jumbo world.
mhm.
Part of that has to do with the fact that institutional lenders don't have an appetite for adjustable rate mortgages, because when rates do depart the environment that we're in and they drop, there are intrinsic expenses in originating a pool of mortgages.
Okay.
So, they're not sold one at a time. They're sold, 1,000 at a time to institutional investors. And when rates drop, there's no prepayment penalty. People will refinance out of them very quickly. And then it becomes a loser for the servicer and the investor. So to that end, they're not offering them. It's not to say that you can't find one at a small regional bank. But in terms of, broad strokes, at the national lending level, you're not finding them available.
Got it. And you're absolutely right, because I do believe that 2021, me as a realtor, we had such a hard time trying to get past the multiple bidding process.
Yes.
And the best time in the last 2 years was actually from mid-August or end of August to December, which is the last few months of 2022, when the rates were kind of on the higher end. But those were the times when it was easier for my buyers. We were able to get a better price, less competition, and maybe even get sellers concessions,
Absolutely.
not give the waivers and stuff like that. So I definitely agree to that. And as I would say that if the rates fall, you can always refinance. One last question, if you don't mind.
Sure.
Because of the kind of volatility that we are seeing in the market today in terms of mortgage rates, yet we wanted to know, is there anything in particular that a buyer would need to know? Like, if they are shopping for a house, can they lock in the rate right now? Can they renegotiate the rates? Like, what all can they do?
Sure. So depending on the lender that you're working with, some of them have what's called lock and shop, which means that anywhere from 60 days to 180 days, you could lock in an interest rate. Typically, after 60 days, there's going to be a fee that's involved for an extended rate lock that would protect you in the event that interest rates rise and you've not yet identified a home. You'll know what interest rate you're getting.
Mm-hmm.
Hopefully the rates will actually be better at the time that you are ready to close, and then you'd have the opportunity to float down. The other thing is that in terms of somebody that's already in a contract or about to go into contract, we tell our clients, who I'm happy to report become our friends, that you need to lock in. When there's an opportunity, if we have an interest rate departure, we can, move the target investor from A to B to C to get you a better rate. Okay. So for instance, we had a lot of people that locked in November at 7, closed the end of December, beginning of January in the 6s. We were able to take advantage of a float down. On the other side of the coin, if you decide that you want to just float and the rates go up, right, aside from paying more money, depending on the file, you could potentially run the risk that you no longer qualify for the loan.
True.
So my advice is lock in and deal with a reputable lender.
Agreed. So here is one sitting right in front of me.
Thank you so much.
Anyone who is looking for, a rate lock, mortgage refinance, there is Sweet Lou, and I'm going to include all his contact information below in the description. Thank you so much.
Thanks, Avani.
So thanks to Louis, or Sweet Lou as we call him, we got to know that you can lock when you shop. Also, you can renegotiate the locked rates in case the mortgage rates come down before you close. If they come down after you close, yes, you can always refinance. So talk to Lou or other preferred lenders if you have, and also realtors who are abreast with the current developments in today's markets, and see how they can help you navigate this volatile market. This is Amni Parikh once again from Public Trust Realty Group. I'm a realtor serving Bergen County and other areas of North Jersey. If you have any questions related to real estate, do comment below or feel free to contact me. Look in the description below for all contact details and the links that I promised you in the video. Alright then.